Okay, it's visible. I'll just zoom in so that you people can see the syllabus. The subject financial specifically
Sir, you are
talks
not
about.
audible.
सर व्हॉइस ब्रेक होते सर तुमचा मध्ये मध्ये.
Now am I audible?
येस सर.
Sir, you are audible, but the voice is coming from like very far and it's not loud.
Just give me 2 minutes. I'll change the instrument for audible. Just give me 2 minutes.
Sure. So still some.
Just a
Hello?
minute. I'll connect the Bluetooth.
Yeah.
Just give me 2 minutes, students. I'm trying the connection. Okay, meantime, the connection is there. Am I audible a little bit now? It is taking time, so I'll not waste the time in audibility.
येस सर, येतोय येतोय आवाज आता.
Yes, sir.
Okay. The subject financial reporting is more talk about how I'm going to analyze the reports. Like we got CA, CWS, or CPA, or any other formats. So in that format, there what they do is they write the accounts. But as a MBA students, we never understand how the account writing is done. We only know that okay, ratio analysis हमने कर दिया, data presentation we are done. So the purpose of this topic or this subject is to understand how account writing is done, how the data about account writing is analyzed. So if you just see, it is said describe the basic concept of financial reporting. Now, most of the students who are coming late or doing some fault, you people are writing an application in a college. So there is a format where you write to, where you write date, where you write the content, how to write subject, so forth and so on. So there is a particular method that it is expected to follow when you're writing in a subject. Same way, when you're writing an accounting, you should follow a systematic way. If I write asset and liability in different angles, it is okay. But when I have to explain somebody virtually or physically, some common methods should be followed. So the first objective of this subject is to describe the basic concepts regarding financial reporting. Second, to explain what are the accounting standards we are supposed to follow. Now, accounting standards are not a benchmark rules. These are guidelines. For example, when you're walking on a road, it is supposed to walk from left side. Why? Because we are being taught that whatever the traffic, it is comfortable to adjust when you walk on left side. But actually, when you walk on right side of the road, because we are driving on right side, you can see the vehicle coming and approaching to you. So this way, the desirable is left side, but conveniently we walk on right side. So what is my convenient and what is feasibility? These two things we need to explain using accounting standard. The third is application. Fourth is analyze. Now, if you've seen the bank balance sheet is in different part. Like it is in 1, 2, 3, 4, 5, and 15 parts are divided. If I approach to the multinational companies, they fall comparative balance sheet or common side balance sheet. When I approach to the Indian accounting standard of balance sheet of Indian companies, they follow debit and credit method where the 2 years are given. If I check the balance sheet of a cooperative firm, it is in different structure. So when I analyze the balance sheet of different structure, they are not in common. They are segregated and they are in different formats. So these financial accounting standards, they are trying to harmonize a system or a method which I can follow and make the accounting reporting in equal formats. The second last, they are interested to teach an MBA graduates how the Indian accounting standard is playing a very crucial role to make understand how the books are written, how the principles are followed, and if any differentiation, what we can do or what we can avoid. For example, now most of you have done the ratio analysis. In your theoretical book, the capital is given only equity capital or preference capital. But when you see the balance sheet of a company, there you got the details like it's a equity capital, 5% debentures, 4% debentures, 3% preference, and so forth and so on. So comparatively, your book knowledge and that knowledge has a different point of view. So how I can understand that statement, how I can dig out the information, these all things are explained in this syllabus of financial reporting. The first unit of financial reporting is preparation of framework. Now, what is a framework? Here, framework indicates how I'm going to write the accounts, how I'm going to mention the amounts, whether I'm writing on debit side, whether I'm writing on a credit side, or anything other. So, how I'm writing in accounts, how I'm maintaining the balance, all these details I'm going to check in accounting standard. The main importance of this writing is to understand or to analyze the sorry for disturbance, to understand and analyze the reports in proper format. So the first unit, they will talk about the accounting concepts and accounting conventions which we need to follow for your account writing. Like there is a going concern, matching concern, consistency, dual aspects, double effect, and all this. If you remember your TY or if you remember your 12th standard, there are 12 accounting concepts and 9 accounting conventions. The accounting concepts means these are the baseline how you understand accounts. And accounting conventions, the meaning of convention is how you're going to convey your records. So concepts are used to communicate how I can write or how I can explain. And conventions are used to communicate how I can explain or how I can explain what I'm going to do. So the first unit, I'm more interested for three things. What is accounting statement? Who are using my accounting statement? What are accounting? So these are two things. Second, third thing is accounting concepts and conventions. Now, my dear students, in financial reporting, as per the syllabus, there are no numericals involved. So it is mostly a theoretical subject, and maximum scoring is possible. The second unit is preparation of corporate financial statement. Now, the question arises, sir, what is a corporate financial statement and what is difference between corporate financial statement and regular financial statement? The corporate financial statement, it talks about how I'm going to deal about the multinational company accounts, how account writing is done, and how I'm managing their all other transactions. Because when I write the account of any cooperative firm, it is considered by board of cooperation. When I write the accounts of sole trader, it is managed in different law. But when I'm writing large scale accounts of corporate individuals or corporate entity, they are maintained about corporate financial statements. This is given in Schedule 2, Schedule 3, Schedule 4, Schedule 5, Schedule 6, Schedule 7, Schedule 8. Then the most important in accounts is inventory. Our third unit is preparation of items in financial statement and revenue recognition using Indian accounting standards. So in this accounting standard, we need to understand the different accounting standards which are available. Now, most of you have seen the balance sheet where you have checked in balance sheet, there are different annexures. Now, what is role of this annexure? The simple role of this annexure is to make you understand the figures which are not mentioned in balance sheet, but they are important for the balance sheet. Now, what I mean to this, suppose I have to disclose what is my inventory. In balance sheet, I am mentioning my stock. So that is my closing stock. But if you remember the cash flow, there are three types of stock. Stocks, I should able to understand the three different stocks. So Indian Accounting Standard 7, it talks about what are the types of inventory. So it gives a disclosure how the inventory valuation is done, what is the cost of inventory, and what are the pricing is done. The Indian Accounting Standard 8, it talks about the errors, the frauds, the presentation style, where I have to take the care that error of omission, error of commission, and error of principles are being avoided. If they are not avoided, at least I should take care that these errors are minimized or rectified in final presentation. The next unit is reporting about assets, liabilities, and disclosures. Now, the third unit, I'm talking maximum things about your trading account and profit and loss. In my fourth unit, I'm talking now accounting standard 2, accounting standard 16, 23, 36, and 38. 13, 19, 33. So, if you remember the balance sheet, in balance sheet on the asset side, the topmost column is intangible assets, the fixed assets, the current assets, the accumulated loss. So these are the things which are given on asset side. So how these things are mentioned, how I do the valuation for same, these all things I'm going to calculate in this fourth unit. Similarly, on liability side, what is my capital? How the valuation of capital is done? So this everything is valued in my fourth unit. My dear students, in a syllabus, they are mentioned different accounting standard. Like unit 3, I have 1, 7, 34, 115. Then unit 4, 2, 16, 23, 36, 38, 19, 37, and 33 as my accounting standard along with account standard 108. When you're preparing for examination, you strictly need to understand the first thing, what is title of accounting standard, second objective, and third its number. Why? Because these accounting standards and their names, if you write in your examination, it will be giving extra marks to your side and it will be helpful for your side. So try to remember these accounting standards and understand their importance and relation to your syllabus. The fifth unit is morely talking about miscellaneous issues in financial reporting. So this talks about the technical errors, the errors about valuation, errors about ethical issues, error about social issues, and errors about how I should avoid manipulations and so on. In simple words, your fifth unit says I should be writing accounts in proper way, proper format, and proper numbers so that cheating, frauds, and errors are avoided. I'm not saying they are zero. It is going to be there, but their effect can be nullified. And this is the purpose of my last unit. So, unit 1, unit 2, unit 3, unit 4, I have learnings about financial statement. Unit 1, I'm going to learn about what is account statement, who is going to use, and what are the practices. Whereas unit 2, 3, and 4, I have certain benchmark total 19 accounting standards, which I need to recall at the time of my examinations. So, my dear students, lot of theory, lot of remembering will be there in case of my accounting standards. There are different books which are suggested. Out of these books, what I suggest, the Financial Management Prasanna Chandra book, which talks about accounting standard or gap by D'Souza, is the most welcome book for your syllabus. By 14th of July, I will update the Unit 1 notes. So even you not receive any book, by going through my notes, you can prepare for your examination. So need not required to worry about the same. So this was the syllabus. Now, what is the purpose of your syllabus? This purpose of my syllabus is the only one thing. I need to able to understand the balance sheet. The second thing, I need to remember I need to recognize and understand the different aspects of any balance sheet. Now, let's understand the basics of accounting standard. So I'll share one more file. Just give me 2 minutes. So since this is my first lecture, I'm going to consider basics. Okay. So let's start. I'm sorry for the advertisement which is shown. Actually, this is a PDF I'm showing from my phone. So the advertisement is displayed because of that PDF. The table of content will first understand what is accounting standard, what is different between IFRS and accounting standard, then categories of accounting standard, its relation, its importance, and applicability. In India, I'm starting with unit 2. I'm not starting unit 1 because unit 1 I have some video which I cannot play on my mobile, and since I'm driving, I was going home. It is late, so I'm taking lecture on mobile. So I'll take the unit 1 after unit 2. Now, in case of my table of contents, we'll first understand history of accounting in India. After 1941, when the World War was started, the British colonial India was a resource for supplying the raw material to the British people. So there was a lot of raw material was supplied to the British, and they used to make the final products and supply to their army. What happens? They were supplying the raw materials, so India became a source of raw material. After Second World War, India became a global hub for exporting raw material and a better market for supplying finished goods. So British first time they understood that we need to do something, because if you just keep on writing the accounts in raw manner, we're not able to analyze what the business is. We're not able to understand how the accounting is done, whether it's proper or improper. They were in need of just some method where they can calculate the profit or loss, because the British colonial they started the international currency recognition in 1943. So by way of currency recognition, they was not able to recognize what profit they have made. So they decided to follow certain guidelines that how the accounting can be maintained. They want to judge, they want to understand how accounting writing can be practiced and how the record is kept. The Lord Vice Conway was the first British people who has given the example of 13 accounting standard in 1978. He has established the differentiation between income and expenditure, difference between the revenue expenditure and capital expenditures, and help people to write the account in systematic way, so that recognition of loss, recording the responsibility, understanding the value of product, and understanding the turnover of the product was feasible and practiced. Later, when we got the freedom in 1947, we has been recommended to follow the British people practice, and till 1949 we followed the same. In 1949, the Institution of Chartered Accountants of India was formed to consider India as separate entity, because in India we have something different rules, some different processes, and some different methods which we need to understood. These methods or these processes are different when we compare to the British people. So if I want to recognize the same, I want to analyze the same, it was really difficult, because I'm not able to understood what is my profit, what is my loss, and how the income is generated. So to give a better idea, the British started following the system of accounting, which is we have modified and followed accounting standard for Indian people. So in 1951, we followed accounting system, and then Institution of Chartered Accounts of India, they started following the accounting standards, and we have started the practice, sorry, we have started the practice of account writing. And that's the reason our accounting standard are written as IAS, that is Indian Accounting Standard, which we later modified with US accounting gaps. GAPS is generally accepted accounting principles of US. Then we have SOX, that is Systematic Stock Writing and Evaluation System. We have SOPs, that is South American and African account writing practices, and so forth and so on. Now let me share a story about accounting standard. There are 13 people who was visited the SEBI in its initial phase. They understood that account writing is not a mere example. What they found, that when I'm writing an accounts, so in that case, recognize the simple reason that if I want to recognize, I have some benchmark, I have some guidelines, and then only writing balance sheet to a writing about other sources. And this the Indian accounting standard was extended to whole industry, and we are recognizing the same. The Institute of Chartered Accountants of India is established as a special article with a power to describe what are the accounting standards. It has got authority to issue and define what is accounting procedures, what are accounting conventions we can follow. So, indirectly, they are the supreme body which helps what is accounting law, what are the norms of accounting, and how I should follow the same. So, let's start with basics. What is an IAS, Indian AS? I'll zoom it for a reading purpose. Indian accounting standard are the standards which are notified by Ministry of Corporate Affairs and conveyed with international financial reporting standards. These are accounting standards which are formulated by Accounting Standard Board of Institute of Chartered Accountants of India. So the Accounting Standard Board, which is a combined body of Ministry of Corporate Affairs and Chartered Accountants of India, is creating the rules, what is accounting standard and what is the practice for the same. This body is authorized to decide flow of activities, their reporting, their evaluation, and the process and documents which are required to follow for these methods. The Indian accounting standards are similar to the IFRS. Now, what is IFRS? IFRS is an international financial reporting standards which is accepted worldwide as a benchmark. Now, there is a question, sir. In Australia, it is a different method. In China, it is different methods. In UK, it's different method. Then who decides IFRS? The basically IFRS is another board which is appointed with IMF, IBRD, and United Nations to formulate the pattern which commonly being desired and followed while writing the accounting on global levels. And in India, we have international, we have accounting standard board which going to decide how the accounting is done based on the formats shared by the international accounting standard. I'll wait for 2 minutes. Please read the slide. Hope I'm clear about what is the Indian accounting standard. Let's move on. The Indian accounting standard is adopted throughout the India, and it is 100% mandatory for all Indian companies to accept this as compulsory advisable format. Each Indian company has been considered as a compulsory mandate that these accounting standards are an essential guidelines how you are writing accounts. It covers all the accounting practices followed. Now the question arises, sir, आपने तो बोला था there is a board of corporate studies, there is a board of corporations, there is a board for sole proprietor. Then what is the role of accounting standard? In accounting standard, the role of board of corporation or sole proprietorship act that they are following the guidelines. They might not following the exact rules, but it is mandate for them to follow the guidelines for adaptation of Indian accounting standards. Since these Indian accounting standards are followed based on IFRS, that is International Financial Recognition Standards or reporting standards, we need to apply the logical standards for Indian companies. So in case of India, we have Indian accounting standard is equal to international accounting standards minus plus or minus Indian customization is our Indian accounting standards. So please read the coverage part. It is very essential for your syllabus. Let's move further. Now let's talk about international accounting standard, that is IFRS, and Indian account standard and their corresponding IS. So here we are comparing the same. What I'll do is I'll take a pause of 2 minutes. I want all of you to just read the, I'll just zoom it for the first few so that it is readable to you. Please read the titles so that I can continue the discussion. Now, let's come back to our standards. We have one side international accounting standard and one side we have something called as Indian accounting standard. The contents are parallel. Only thing is that numbers are changed. For example, if it is 9, we are following 109. 10, we are doing 110. So if you check the numbers pattern, we have added the one digit in front of that number. So this is the way you can remember the correspondence IFRS. Now, this was an introduction about Indian accounting standard and international accounting standards and how they are interlinked with each other. Now, let's talk about Indian accounting standard based on their nature. So, as I said, the accounting standards are classified on different patterns. The asset and liabilities, we got accounting standard 2, 16, 23, 36, 37, 38, 40, and 16. What I will do is I'll share this PDF file day after tomorrow in a group. And what you need to do is each accounting standard you need to analyze and understand thoroughly. Because when I say accounting standard 2 talks about inventory, what is important for me? Understand the accounting standard, understand the meaning, understand its major contents, and then analyze its application. The third thing is when we're learning about any accounting standard, we need to understand its format. So when you're writing about, suppose, borrowing cost, then the accounting standard will define what is a borrowing cost, what are types of borrowing cost, and how I should record the different types of borrowing cost. If I refer to the Indian Account Standard 38, then the intangible asset valuation, he will define what is intangible assets, what are classification of intangible assets, and when and where I should recognize or record intangible assets. Then in financial instrument and forex, I got IS 21, 32, 107, and so on. So for your syllabus, where most important is assets and liabilities. Second, we have group of accounts where the 27, 28, and so on we required. About financial instruments and disclosure, it is not so important as in your examination concern, but for knowledge sake, we'll go through that and we'll understand how the system is running, how the account writing practices are followed, and how we need to follow the benchmark given. So there are different accounting standards. I'm not making you bore by understanding the more. Let's understand the marks and weightage. Framework for preparation and presentation of accounting standard. The first is Indian Account Standard and adaptation of Accounting Standard 101. So the accounting standard for balance sheet, they got total 35% marks. Accounting standard for P&L, there are total 6 accounting standards and they got around 25 marks. So here 35 plus 25. So it becomes 60 marks. And your total 40 marks are reserved for your trading account where you have only 6 accounting standards. So comparatively, if you can see, the trading account has less accounting standards, but more weightage. Whereas your balance sheet has more accounting standards and less weightage. So if I compare the marks and weightage, it's very easy to remember the trading account. And it is very difficult to understand classification of balance sheet and its application. So based on the scores, based on the marks, we need to follow and we need to understand how many accounting standards are there and how I can analyze, interpret, and read the different accounting standards and their practice. Just go through this. I'll wait for 2 minutes. Don't worry about copy paste or don't worry about remembering. There are different ways how can remember the accounting standard. When I'm going to discuss each accounting standard in detail, I can just elaborate you how to read it. So this is just an introduction about Indian accounting standards. So what I suggest, don't take tension. It's very easy. All of you know how to write and balance sheet, what is the format on profit and loss, and what is the format of trading account. And simply these formats are nothing but your accounting standards. So these are roadmaps. We'll elaborate this in next sessions. Most important, Indian accounting standards are not applicable for following entities directly. I'll wait for 2 minutes and I'll start explanation. Please read the slide. Now, these entities, why the accounting standard not applicable? Because they are governed by different laws and they are not writing the accounts fully. What I mean to say, that take an example of a trust. A trust is normally classified under charitable or non-charitable act. If the trust is interested to create and profit, or if the trust is interested for social wellness, then in that case the trust is covered by the different acts. So they are concerned by the charitable trust or commissioner of charity, where they have to disclose how much donations they are received, how much expenses they are made, and how they are used the available funds. In the partnership firm, they are governed under the Partnership Act 1932, 1964, and Amendment 2016. So, in Partnership Act, the account writing practices are in general, but reporting of profits and account writing is not being formalized as per the Indian accounting standard. They are more governed as per the Partnership Act and the agreement between partners. The sole proprietors are concerned on three levels. They can be Hindu undivided family businesses, they can be traditional business houses, or they can be the informal unorganized sector shops which are operated in India. So considering all this scenario, in their case, the accounting is not followed a systematic way. They follow single entry system because for them, writing debit and credit is a time consuming effort and it is not so effective and useful. And that is the reason they are not following accounting standard directly. The company which is limited by liability, which is limited in nature. Now, what is limited by liability means? The organization or the body of entity where we have find that the liability of firm is not 100%. It means I made an expenditure of 100 rupees, but I have only liability of 10 rupees, not 100 rupees. In all this case, whatever the liability which I am responsible for, only and only that amount I supposed to consider for my business. So if I'm limited by liability, then in that case, my financial reporting standards are not applied. The societies are covered under board of cooperation. They are again can be charitable societies. They again can be non-profitable societies, or they can be any other type of society. So in all the cases, the societies are governed by the board of cooperation, or charitable commissioner. So they are not directly applied the rules of Indian accounting standards. The second thing about banks, the banks follow the Reserve Bank of India norms about how the accounting is to be done. They have classified the financial statements in 1, 2, 3, 4, 5, 6, 7, 8, 9, and 14. So they are writing the accounting, but as a different 14 pro forma, which they are writing. So because they are governed by RBI, they are not directly instructed to follow the format which is given by the accounting board. So again, they are not following the Indian accounting standards. Then insurance companies are regulated by IRDA and Ministry of Commerce. Their accounting is partially similar to the multinational companies. But since they are considered to be classified companies where the valuation disclosure had limits. So in their case also, the accounting standards which are followed are not directly Indian accounting standard. They observed a different method or terminologies which are instructed and guided by the IRDA. The multinational companies who are registered at other nation but practicing in India, they can be concerned with Indian account standard or they can be recognized in international accounting standard. It totally depends on their registration and disclosure. Suppose Coca-Cola India, it is registered, it is registered in India, but its account writing is done in US. So whatever the US accounting principles, they are disclosing profits there. So that method, that terminology, the company is not required to book the profits in India. They will book the profits on global level and they will do the reporting as per the international accounting standards. The entities who are listed under SME, that is small and medium scale enterprises, they have option to follow the Indian accounting standards or they can follow the sole proprietorship or a cooperative body or they can follow the laws of Partnership Act. Because their natures are so small, their operational can be a single-handed, joint-handed, or a typical group of people. So depend on the controlling body or organization, their accounting standards are differently followed. So I'll wait for 2 more minutes. Please go through the list. Now, the question is, in case there are unorganized sector, why the name of organized sector is not mentioned in the list? Simple reason, when I say unorganized, it simply indicates it can be any other type. So the type or specification is not clear. Since the specification is not clear, they are not mentioned in this list. But the unorganized sector where they are not registered or they are not required the authorization of capital or any other value, in that case, the accounting standard compulsion is not followed. Now, let's go to the case study of applicability and follow. So, the first case study is company A is unlisted company having net worth of 250 crores and holding a company B which is listed company, and it is following Indian account standard. Company D is unlisted company. So we'll take the first case. Company A is not listed, but company B is listed and it's a subsidiary of A. So in this case, the reporting is mandatory by B, but it is not mandatory to its mother company. Again, when the mother company shares are disclosed or its income is generated, it is recognized by company B. Only and only that transactions are being recognized for the Indian accounting standard. Even though I make it profit, I make it loss, or I do it any other thing, they are not being considered, they are not being valued for any other concerns. The second case, company D is unlisted and company B is enlisted and holds 25% shares in company B. The category of D company is not of company B. Then in case I'm an investor who is from unorganized sector but investing in recognized company, I will be classified as recognized investor and I need to follow Indian accounting standards. So these are certain cases. The remaining part we'll discuss in coming sessions. My dear students, please remember accounting standard is a channel or in a process to mobilize your funds in systematic way where our key interest or emphasis is given to write in proper way, to write in proper shape. Because unless and until I write in proper format, understanding my profit or understanding my loss will be a serious concern. And that's the reason accounting standards is very vital and crucial. So in today's session, we will learn about what is our syllabus, what are major contents of syllabus, and I just introduced about history of accounting standard in short and different accounting standards which are very crucial for our syllabus. There are last 2 minutes. If any doubt, you can unmute and ask or you can share in chat box. I'll wait for 2 minutes. Is there any doubts?
No, sir.
Thank you for reply. Now, since it's raining, I'm not sure about electricity, but again at 8 p.m. we got a session of international finance. So I suggest all students to be present for that session because that session again a crucial where understanding accounting, understanding reporting, and understanding the basics of international finance is going to help for your career, for your progression, and for your further growth. So that's all today as an introduction to Indian financial reporting syllabus and other concerns. We'll again meet tomorrow at 6 p.m. and we'll discuss more the first chapter and understand the users of accounting standards and users of financial statements and types of financial statements which are published and used in India. So thank you all of you being part of this meeting. It is suggested to share me the screenshot of your morning and evening sessions individually so that I can record your attendance and all the things. Please come prepared tomorrow for my session on financial reporting where we are going to discuss about the different types of users, different types of financial statements. So thank you once again and wish you a wonderful day ahead. We'll meet again at 8 p.m. for our session on international finance. Thank you. Now you can log out and join the other meeting.